In early 2026, a major geopolitical conflict just exploded, and it sent these massive shockwaves through the entire global economy. Now, this wasn't just some regional dispute. It was like someone pulled a single critical thread that threatened to unravel everything. So let's dive into how this crisis went down, and more importantly, what it means for all of us.
Think about that for a second. That's not me saying that. Those are the exact words from the International Energy Agency. When an organization like that, which tracks this stuff every single day, uses the phrase largest in history, you know we're talking about something on a completely different level. It really sets the stage for the massive scale of what we're about to break down.
So where did it all start? Well, the whole thing ignited in one single critical location, a geographical choke point, so important that shutting it down sent the whole world into a tailspin. Let's take a look at how that happened. And things moved so fast. In late February 2026, the conflict kicks off. By March 4th, not even 2 weeks later, the decision is made. The Strait of Hormuz is closed. And just like that, a huge portion of the world's energy trade just stops. Dead in the water. It's almost impossible to overstate how important this little stretch of water is. You see, it's not just a waterway, it's the main artery for the global energy economy. A fifth of all the petroleum the world uses flows right through there. Closing it is literally like clamping that artery shut.
Right, so with that artery clamped shut, the first and most immediate effect was a massive, historic shock to energy markets. I mean, bigger than anything people had seen in decades. 10 million. Let that number sink in for a minute. 10 million barrels of oil just gone from the global market. Every single day. That created this enormous supply vacuum almost overnight, and the whole world was left scrambling to figure out what to do. And you know what happens when supply vanishes and demand stays the same, right? Prices explode. Brent crude, which is the global benchmark, shot past $120 a barrel. This price surge was really the first domino to fall, triggering the inflation that would soon grip every major economy.
Qatar's energy minister did not mince words. He saw exactly what was happening. This wasn't just about paying more for gas. He understood it was a direct threat to the stability of the entire global economic system. His warning was incredibly stark and, as we're about to see, scarily accurate.
That shockwave from the energy crisis didn't stay put for long. It slammed right into the financial markets and triggered what you could only call an economic earthquake, fueled by pure fear and uncertainty.
For a lot of economists, this felt dangerously familiar. It was giving them serious déjà vu, drawing these direct parallels to the 1970s energy crisis. All the same fears came rushing back: supply shortages, wild currency swings, and of course, runaway inflation. The reaction from the markets was, well, immediate and brutal. If there's one thing markets hate, it's uncertainty. And this was uncertainty on a global scale. You just saw a sea of red. The Dow, the S&P 500, indexes all across Asia and Europe, they all took a nosedive as investors just ran for cover, bracing for a worldwide recession. And this brings us to every economist's worst nightmare: stagflation. So what is it? Well, just imagine your bills are going up and up, but the economy is shrinking, so nobody's hiring and your paycheck isn't growing. It is the absolute worst of both worlds, and it was suddenly the number one risk on everyone's mind. Now here's the thing. This economic pain wasn't shared equally. Not at all. While pretty much everyone was hurting, different parts of the world faced their own unique and frankly devastating challenges. It really fractured the global economy.
Just look at this. A staggering 75% of the oil leaving the Gulf goes straight to Asia. That kind of extreme dependency made industrial giants like China, Japan, and South Korea incredibly vulnerable. Their entire economic model, which is built on making and exporting goods, was suddenly in serious jeopardy.
This table really lays out the different kinds of pain. For Europe, which was already worried about energy, the crisis raised the terrifying possibility of permanent deindustrialization. I mean, that's a scary thought. In the US, it was all about that surging inflation, with gas prices hitting $4 a gallon and making the Federal Reserve's job almost impossible. And for the Gulf nations themselves, they were facing a total systemic collapse, threatening their ability to get even basic things like food and water. Okay, so we've been talking about these huge abstract things: global markets, geopolitics, but let's bring it all home. Let's translate this chaos into what it actually means for you, for your budget,
and for your day-to-day life.
Because at the end of the day, this is the question that really matters, right? How does a conflict happening thousands of miles away actually reach out and affect your personal finances? Well, the ripple effect hits you from every angle. It starts at the pump, with gas prices surging, but it doesn't stop there. Higher energy costs mean it costs more to make fertilizer, which means your groceries get more expensive. At the same time, inflation is just eating away at the value of any money you have saved. And your retirement investments? They're on a roller coaster you definitely didn't sign up for. It was a squeeze coming from every direction.
So, staring into this abyss, what happens next? Well, expert analysis basically laid out three potential paths, three very different futures that could define the next chapter for the entire world economy.
The most likely path was a grim war of attrition. Basically, high oil prices and continued economic pain for a long time. The best case scenario was a fragile settlement, a diplomatic miracle that could let the markets recover. But the worst case, a regional collapse, that was a catastrophe so devastating you couldn't even really predict the outcome. The stakes just couldn't have been higher.
The IMF's chief economist really summed up the mood perfectly. Any bit of optimism that existed at the start of the year was just gone. The outlook had, in his own words, abruptly darkened. A long, dark shadow of uncertainty was now cast over the entire world. And all of this leaves us with one final, really important question. The 2026 crisis was a brutal stress test for our modern world. It showed us just how connected we all are, but also how fragile that connection is. It really forces you to ask, are we building a world that can handle these shocks, or are we just one crisis away from watching the whole thing fall apart?